Thank you all for joining us today for short shipping deductions. We have a lot of good content to cover today, but before we do that, we always like to introduce ourselves. So my name is Danielle Gloy. I will be monitoring the chat today, and then leading our content is Peter Spalding. So we work on the Supplier Wiki team. We help research and write some of the content that you may have seen on our website. So we want to create resources that are easily accessible and beneficial to you. So if you think of a specific topic that you would like to see covered, or if there is certain content that you would like to see more of, please feel free to reach out to us. We want to make educational resources that are going to be the most beneficial to you. So we would just love to hear from you. And so moving on for today's agenda, we're going to start off by going over what shortages are and what causes those shortage deductions. We'll go over how to avoid and dispute them, and then do a little deep dive into shortages at specific retailers like Walmart, Amazon, Target, Kroger. And then we will do a live Q&A at the end and finally wrap it up with a product preview. So we've got lots of great content to cover today. All right, so here are a few FAQs that we typically get during webinars. So first being, will we be getting a copy of the slide deck? Yes, absolutely. You can expect to see the PDF version of the slide deck as well as the recording of the webinar appear in your email inbox in about 3 to 4 business days. So don't worry about quickly trying to take any notes or like any screenshots of the slides. We will make sure that we get those resources to you. And then second question, what is the best way to ask a question? So at the bottom of your screen, you'll see a chat tab, and then you'll see a Q&A tab. So the chat tab will be a great place to submit any insights or just to engage in conversation throughout the webinar. And then the Q&A tab has 2 little speech bubbles, and this is where we ask you to please submit any questions related to the content, as I will be able to monitor them and then tee them up for Peter for the Q&A time at the end. And last little thing before we get into the content, if you are new to our webinars or have never heard of SupplyPike, we are a Northwest Arkansas-based software company who helps suppliers reduce revenue loss by detecting compliance issues and fighting them through business logic and automation. So we do this in a lot of different ways and with multiple different retailers like Walmart, Target, Amazon, Kroger, and we have actually just recently launched Home Depot, so go check that out. And just a little shout out, we work with a lot of great suppliers across the box in almost every product category. We have some of them up here today. And if your logo is not up here, we would love to see it at some point. Our goal is to help you get paid and get better. It's our famous motto. So with that, I'm going to hand it over to Peter to get into today's content.
Okay, thank you, Danielle. Yeah, so at Supplier Wiki, we really want to cover kind of any categories that are of interest or relevance to suppliers of any kind. But today we're covering some content that is very, excuse me, near and dear to the hearts of SupplyPike. This is really the first big thing that our software was trying to tackle is how do we deal with revenue loss that is kind of the most devastating in terms of what's actually getting taken off of the invoices, and that is kind of the most commonly disputed and kind of the most commonly won back. We'll be looking at all of the kind of numbers there in a little bit, but this is a fundamental, I think, of accounting for suppliers, and one of these huge kind of blind spots for a lot of people who are just getting started. Or for smaller companies who are just kind of making it into these big retailers. So we're going to go over some very high level stuff about short shipping, and then get a little bit more granular as we go into each of the retailers. If you're interested in what this looks like in newer retailers, like we'll be looking at CVS here and Home Depot in the next couple of months, and probably expanding out into other retailers as well. Go ahead and share any of that relevant information with other teams in your company as well. That would be really, or I imagine could be really beneficial to them too. So, but yeah, today we're just going over basically kind of the fundamental revenue loss form, which is short shipping. So And this is just not receiving some or all of the goods that have been invoiced by a retailer. And some retailers will be more specific than that. If the entire shipment is missed at Walmart, it sort of is short shipping, but not really. Walmart has codes 22s and 24s, I believe, are different kinds of shortages. And then 25s are we didn't receive anything at all. So some people will discriminate between that, some or all. Some retailers will, and some won't. Some will kind of, if a shipment has been missed entirely, it'll still be kind of lumped in as a shortage deduction and not something else. So all of this will vary a lot depending on the retailer, obviously, as we go. And really, I should say too that all of this is derived from Walmart, which is not to say that every single retailer functions in the same way as Walmart, or that every retailer is kind of built off of the Walmart model, but that we started doing all of our research off of a Walmart model and have since been kind of adapting. Shortages at Amazon are, and really everything at Amazon is completely different. Amazon has very different functionality from Walmart for a lot of these things. But Walmart really does set the stage for brick and mortar. And so there is a lot of overlap, which is why we're using kind of this example to lay the foundation for everything else. But I already mentioned code 24s. This is just a visual representation, right? The supplier's invoice is deducted for a shortage, which states that the pomegranate juice and grapefruit juices are missing. So in this example, it looks like 2/3 of the shipment is missing, so it'll be a huge fine. And in this example, we have $1,200. But relative to the whole thing, a supplier is basically receiving a third of what they're expecting to get for a particular shipment. Now, it may be that Walmart is accurate and that Walmart really is just getting 3 cases of orange juice, and the supplier is incorrect in thinking that the supplier actually shipped all 9 cases, in which case that's a different sort of accounting issue that isn't as devastating, right? But if it is a receiving error and the error works in Walmart's favor, then it's a double whammy, right? You're losing a lot of product that isn't that you're not getting paid for, and it'll affect your compliance scores as well, and everything will kind of snowball from there. So there's a bunch of different ways of conceptualizing the root cause of shortage deductions. Is something that we've been kind of talking about a lot lately, is how can we help people do a better job of getting down to the particular issue, who is particularly at fault, at what point does that miscommunication happen, etc. But some of the root causes for shortages could be poor labeling, which is obviously a supplier-related issue, or falls into the supplier bucket of culpability. You could also have a receiving error, which is obviously the retailer's culpability. Mismatched pack types is something that we see from time to time. Items shipped differently. Or if the invoice arrives before the shipment. This is something that is pretty common as well. That can throw off the whole kind of the whole receiving chain of events. So in addition to the invoice deduction, the supplier receives a PO defect fine, and the failure to ship in full for the PO hurts their OTIF score. So this is using a lot of Walmart language to really just talk about something that is pretty common throughout most major retailers, which is that there are multiple how should we define this, teams within the retailers that are all designed to do the same thing, which is to make sure that they're getting every single thing that they order all the time. And those teams don't always talk to each other. There isn't necessarily coherent forms of communication that are happening across all of those teams. So we used OTIF here. OTIF is a term that does extend well beyond the world of Walmart. But at Walmart, it is a particular compliance program and a particular compliance team. And that team is trying to determine how often you are on time and how often you are in full. So if you short ship, you're going to get an in full fine, which is different from an AP deduction, and different from other forms of compliance performance, right? As well as a PO defect charge, which in this case at Walmart would take the form of a SQEP fine. So in that instance, and this is just an example, kind of using some Walmart language here, you're really getting hit with three different sorts of revenue loss, as we like to call it, with one particular issue. And that particular issue might not even be a supplier issue. It might be a receiving error. So this happens from time to time, and this is why we talk about shortages. This is why we talk about shortages as if they are kind of the bread and butter of the revenue loss space, because they have the capacity to have this massive snowball effect in other areas too. So this is another kind of way of talking about the same thing we've been talking about, which is just that shortages are the most devastating, the most common deduction, and the most devastating form of revenue loss in terms of dollar totals across the major retailers. So here we have just Kroger, Amazon, Target, and Walmart. But it's basically a snapshot with the major retailers. This is what's most common. So at Amazon, the language is shortage chargebacks, which will be a little bit confusing if you're in Walmart too, because chargebacks at Walmart are AR deductions, not AP deductions, and they use that language to kind of distinguish them. Most other retailers don't. Most of the retailers will kind of have a term that they like to use, and they'll interchange it with a bunch of others. But yeah, there isn't a code distinction there. It's just a shortage chargeback. At Target, their code A030, which they define as carton shortage. Walmart, we've listed code 22 because that's the most common one, but 24s are also shortages. And I'm tempted to say that 23s are too. So they have multiple forms of shortages, but code 22s are the most common deduction, which they define as goods billed, not shipped. And then at Kroger, code 6, item invoice not received, which is a term for that in its own definition sounds like it could be used to describe we didn't get the shipment at all, or we only got part of the shipment, right? So already we're seeing how the language that retailers use to describe what these are can be more precise in some areas, less precise in others. Sometimes that lack of precision can lead to a lot of miscommunication. If you're looking at a code 6 from Kroger and what you're thinking is a shortage, but what actually happened was the entire shipment was missed, then that could change the way that you dispute it. It could change the way that you, the way that you're doing research or root cause analysis or trying to get better, trying to avoid that in the future. So here we have three, the most common deductions at Walmart, code 22, 24, and 25. Correction, 21s, 22s, and 24s are technically shortages, and 25 is sort of a shortage, but it is when the entire invoice, the entire shipment that was invoiced for has not been received. So here we're describing those as shortages. And if you can see, if you want to think of a code 25 as a shortage, then what you have is the top 4 deductions at Amazon are all shortages, right? So it's definitely, sorry, I said at Amazon, but I meant Walmart. At Walmart are all shortages, and that's making up a significant chunk. Somewhere in the neighborhood of 80 plus % of deductions for Walmart suppliers are shortages. So it's an epidemic, and it's not the long and short of what it means to be a good supplier, right? Is that you make as much money as you can, right? Suppliers are motivated to have good SQEP scores, good OTIF scores, everything else too. So it's not the only thing that matters. But in terms of being profitable, being a best-in-class supplier in Walmart, that's a huge hurdle. Is that. So we're going to start with kind of language to describe how these can be avoided. Some of this language is very general. Some of it is a little bit more detailed. And then there's some, I think, pretty good insights that can be sort of plucked out of the data too. Some sometimes we'll say don't short ship, right? And sometimes suppliers just have to short ship if the demand for these POs is just too much. So that that happens, and there is an element of inevitability, I want to say, there too, is my understanding of it. A lot of retailers will talk about having perfect supply chains, having 100% on time and full or whatever. And I would like to call out that there's a pretty good possibility that that's just not really realistic. And what's really happening is that retailers are just trying to motivate people as much as possible to hit those benchmarks. So that's a call out that I would like to make too. Shortages are so common. What the way I like to see it is how can we just sort of reduce that to a bare minimum and then keep it there. And that doesn't always work whenever you're trying to talk to your boss or explain what's going on. But that's my conviction as someone from the outside who's been talking to people in this world for a while. Retailers themselves, how does that manifest for retailers themselves? Well, there's an element, there's always going to be a certain number of open shelf space, right? Which is the thing that none of them actually want. That it's always going to kind of be the case, right? But one of the ways that they try to minimize that as much as possible is by making shortages happen as little as possible. And so, yeah, we're growing in efficiency. We're trying to be perfect, but all of that is a little bit of a ways off. That's how I would kind of think of it. So item setup and invoicing. Item setup is really big for all kinds of deductions, shortages especially. And invoicing obviously too. So recommendation is to submit only one invoice per PO when possible. Again, this depends entirely on the size of the supplier. It depends entirely on the relationship that you have with your retailer. But that can keep things a little bit more simplified if that's possible. Confirming item setups for vendor pack quantities, warehouse pack quantities, all of that is vital. You can end up getting a ton of shortages all in a row if something is clearly set up incorrectly. So another way to sort of integrate that is to just have a certain amount of oversight into your shortages. Look for trends in geographic locations or with particular items, especially in this example. Is there a particular item that is always being shipped short? And does that have something to do with our vendor pack quantities or something like that, right? So keeping an eye out for that. Transmit invoices with retailers' item numbers. Kind of intuitive there. Match your invoice to the PO and don't make adjustments on invoice that don't match PO. Again, yeah, easier said than done. But it is important. The way that I would think of this is that this is all about having alignment with the retailer about expectations for shipments and all of that. So the more alignment there is, obviously, the less communication there will be. The less communication there will be, the fewer deductions there will be too. Packaging and labeling, and I would say that this is a kind of an overrated one. Not something. It's not. We don't see this really resulting in a whole lot of deductions or a whole lot of shortages. And even if it does result in quite a few SQEP fines or compliance related things, the fines tend not to be too expensive. So, and I know that it sounds a little bit crazy. If you have a fine worth any amount of money, it should be gone after, right? And it needs to be tracked for sure. So take all of that with a grain of salt too. But when it comes to shortages, if there is an issue with the packaging and the labeling, I'd say it's more often than not that's got to do more with item setup or other forms of miscommunication, like setting up the right timing and all of that, than it does with the actual labels being wrong. I was talking with a current customer a little while ago about all of a sudden they have a perfect record for barcode compliance, and then all of a sudden in one DC they get hit with 12 fines in 1 month. And so what I said is either that means Walmart changed something about their receiving process and it wasn't communicated clearly, or there's a new person who's doing the inspections who is doing it wrong. And so, yeah, it's yeah. Um, in my opinion, the packaging and the labeling is very rarely incorrect. There's a pretty good process in place. But what we will see is that as things become more automated, these fines could increase whenever there is an issue. And so you might see that like all of a sudden, there's just 12 different inspections and there's 12 different errors. And again, that could be a retailer issue, it could be a supplier issue. And it's better to avoid those, obviously. But a couple of little takeaways is that master packing, when it can be avoided, generally should. And again, no one has that as a policy to just do master packing all the time. It's almost always something that's done whenever it can't be avoided. So, but as a general rule, use slip sheets between POs if palletizing freight. Identify PO number and facility number on labels. And the label application, barcode application, putting them in the right place, making sure that there's the right number. All of that is very difficult to do. It's very hard to figure out. But again, once it's figured out, it's pretty easy to kind of stay up to date with Walmart's changes. So, but yeah. And then as in the example that I was using before, learning how to dispute those is a very challenging thing. Disputing shortages is pretty easy at Walmart and with most retailers. Because they're so common, most retailers have a pretty built out process for dealing with them. But sometimes, let's say if there's a new compliance program, SWEP is a relatively new compliance program at Walmart, there won't be a process built out for disputing the deductions necessarily right away, right? So originally, a lot of OTIF fines were being disputed with buyers. Some SQEP fines can still be disputed with buyers, depending on what the issue is. Some of them can be disputed in the Fix-It app, right? That's not something that we talk about very much, but that's happened before. You leave a comment in the Fix-It app and it actually gets the whole fine to go away. So that's happened before, but of course, high radius is technically the place where that disputing is supposed to happen. So anyways, but yeah, the big takeaway here is I would say packaging and labeling is usually indicating a different problem somewhere else. Or if there is a packaging and labeling issue, as things become more automated, it'll be there will be a lot of red flags happening all at once. And you'll know when to make a change based off of that. So, and then color coding imagery, obviously, for orders and products is a great best practice too. So this is more kind of just general high level terminology for logistics. So, but again, it's helpful to see this depending on where you are in your organization. The SKU is the smallest level of item, I guess, for shipping to any retailer. So each warehouse pack is comprised of the SKUs. Each vendor pack is comprised of the warehouse packs. So the vendor pack has to have an easy to read label. The smaller groupings of product have to have their own labels as well. And that's the general breakdown. And again, that's pretty general for logistics across the board. And yeah, so that's a kind of helpful way to think about it too. Palletization is something that varies a little bit from retailer to retailer as well. So having an awareness of those differences can be important. What sort of packing some retailers will tolerate and some won't, all of that matters too. So what considering the product itself, what the needs are, Again, we don't see very many compliance fines for like not having a hazmat label or not like any of that, but some products, depending on what they are, will be much more needy if you want uh, in terms of packaging. And so, yeah, having an awareness of all of that, and then knowing all about cubing out on the truck level, but also kind of cubing out of a master pack, if you will, too. What are the limitations there? Um, but a lot of you too, this isn't something that's necessarily happening at the supplier level, but more on a kind of logistics level. Again, just having a conceptualization of this process is very helpful for understanding how shortages happen whenever it gets a little bit more technical. So the big takeaway from all of this for me is that it's good to have something of a sense of how these breakdowns are happening, so that whenever something does go wrong on a technical level, it can be addressed at a technical level too. So yeah, what are Walmart's or any other given retailers' initiatives in packaging tech and manufacturing, and how is that going to affect your business? How automated is the receiving at Amazon relative to Target? And so maybe your Amazon team needs to have more of an awareness of that than your Target team does. How good, another kind of shout out, just how good is your retailer at letting you know whenever updates have been made? I hopped on that call and this person suddenly like, yeah, our barcodes are not compliant. And I'm thinking like there is a chance that Walmart has changed this halfway through the year. They've just kind of thrown in a change, and the people will have to contact their buyers to figure out what that change is and all of that. So there's a chance with Walmart, because crazier things have happened, that there's just an update to protocol out of nowhere. And the way that they're going to communicate that to people is through fines. But again, if you think about it from Walmart's perspective, perhaps they're thinking, oh, we can make money, but no retailer wants an inefficient supply chain. So that's an important kind of part of this process to think about too. The bigger the retailer is, the easier it is for miscommunication to happen. We should think of Walmart as a small country more than as a business, right? It's massive, and it's very hard to get everyone on the same page. So maybe there is an evil man twisting his mustache in an ivory tower. That's always a possibility. But there's also the possibility that what's really happening is there isn't clear communication between teams, and you have hundreds of people that are all kind of working to make sure that the same supply chains are improved, and that can pull people in a lot of different directions. All right. So when it comes to disputing shortages, doing validity checks is really going to be the first step, and sometimes the most time-consuming step as well. We're going to do a product preview at the end of this, and we're really proud of our product's ability to do validity checks more or less unconsciously and automatically for suppliers. So I'll be chatting your ear off about that later on. But knowing which deductions actually need to be disputed and which ones don't is kind of the first part of the process, unless you're at Amazon and everything needs to be disputed, right? That's how they do their settlement disputing. What we always advise Amazon suppliers is dispute everything, because you need to dispute it in order to be able to settle on it. So that'll improve your settlement later on down the road. So again, Amazon is kind of a unicorn a little bit. Amazon is exciting. It's different. It's the future maybe in a lot of ways, but at the same time, what we've also realized is that brick and mortar isn't going away entirely. So but yeah, it's a fascinating process that they have for dealing with shortages that we could talk about at another time if it's a little bit more relevant. But yes, and to kind of reiterate, invalid shortages. So before, what I was saying is that valid shortages are potentially inevitable. Invalid shortages are kind of inevitable too. Humans exist all along the supply chain, and they are fallible and they make mistakes. And so having that baked into your business plan is the best kind of possibility, is the best way to go about that. So generate store and packing lists that match ASN and invoice. Again, getting congruence between all of those points of data. And then it varies a lot depending on whether you're collect or prepaid, whether it's going to be BOLs that you would use to dispute or PODs. And again, this is language that is a little bit not as relevant for Amazon as it is for the others, because Amazon is so unique. I would describe Amazon as basically having the settlement disputing functionality that Walmart used to have for some of their suppliers. Amazon does that for everyone. So it's sort of like, well, let's do the math and try to figure out this number of your shortages are likely to be invalid, right? So we'll give you a chunk of that back freely, and we're just going to do it from supplier to supplier, and try to kind of make the best out of it. But they also have smart matching, which is super cool, and very different from Walmart. Walmart hasn't initiated any kind of software to make sure that there's alignment between all of these. And smart matching is really great. So it's something that in our Amazon product we include, is a little bit of a graphic on the dashboard to show you how much money you have won back just from the smart matching process at Amazon. So that's Amazon going out of their way to be like, hey, we should have given you $19 more million last year. And so we did. So sometimes those are kind of the numbers that we're talking about. But for most other retailers, basically, the BOL is your proof that this shipment was collected, and here's the timestamp, and here's all of that, right? And for prepaid shipments, it's the PODs that you would get from your 3PLs or from your own fleet. So having easy access to all of that and knowing how to navigate all those documents, that's what really kind of makes the process time consuming, unless of course you've got some help from a SupplyPike or something like that. I'm gonna do a time check here. Okay, so you're going to need the PO number, obviously the ship to address, item and shipment info, as well as signatures on those documents for them to be official. We have a little call out here for shipper load, shipper count, shipping at Walmart. That's their language for it. It does exist at other retailers as well. Again, this is a sort of thing that most people don't necessarily choose to do. It's something that a lot of suppliers will do as a kind of necessity to make things more efficient. You know, okay, we'll take less money, but we want this out right now, right? So we'll do a shipper load, shipper count. But basically, SLC makes it difficult to win back a shortage deduction because it's the shipper who's loading it and it's the shipper who's counting it. So Walmart won't really recognize that as official documentation for disputing. So there's different ways to do it. We have some content on SLC, shipper load, shipper count on Supplier Wiki, but only go looking for that if that's relevant to you. If that's your logistics team, then don't even bother with it. But yeah, it is tricky, and it is a kind of gray area between collect and prepaid that doesn't get talked about very much. So there's all that. What do you need to dispute a shortage deduction? We've basically been covering this already a little bit. But it's important to know that suppliers are always the guilty party until proven innocent. And retailers, for the most part, aren't going to go well out of their way to try to make sure that you're not paying them too much money, right? Or that they're paying you not enough money. So I used the example of the Smart Match at Amazon, which is a very cool thing, and kind of an exception to this rule. but for the most part, you're going to be the one having to check their math as they go through. And this is true nowhere more than Walmart, right? At a Walmart, um, their priorities are their standards are very high for their suppliers, and their priorities are having shelves filled. So they're going to be as picky as they can be about it, and for good reason too. I don't want to say that there's it's completely arbitrarily evil. What they want to do is to just have everyday low prices and available products on shelves for a lot of the mid-range, low-income people in their shopper bases. So um, this is what all of this kind of creates the environment that is, 100% on time, 100% in full. This is what we want. Right. And I shouldn't be picking on OTIF because OTIF changed to be more reasonable recently too. But yeah, it's a little bit different there. So in general, you're looking at information about the claim, invoice, and shipment itself. And the big thing is the PODs and BOLs at Walmart, right? There's a breakdown between collect and prepaid again as well. It's going to be the BOL for collect and the POD for prepaid. Because again, at what point that's just about at what point does the shipment become someone else's responsibility? If the store is only getting 10 out of 20 of what they were expecting, but all 20 were delivered to the DC. This is a kind of flawed way of thinking about it. But the store would be under the impression that they were shipped short. But the proof of delivery at the DC would be that it was received in full, and that the issue is Walmart's, not the suppliers. So basically, that's what these documents are being used for, is to determine at what point was something short. Where did the shortage actually occur? And was it short according to what was ordered or not? So here's an example BOL with the crucial information blurred out here. And this actually is an example of a shipper load, shipper count BOL, which is a kind of cool little thing. If you want to look down at the bottom, right by the shipper signature / date, if you look in the box immediately to the right of that, trailer loaded by shipper, freight counted by shipper. Okay, so this is one of the BOLs where Walmart would maybe be like, I don't know if that counts, because we have no one from Walmart who's confirming this count, right? It's just the shipper who's confirming this count. So that's where it gets a little bit sticky. But that's where your crucial information is, right there. You got your signatures that you need, the item information, PO number, and destination. Here's an example POD. You got OSDs there, so overages, shortages, and damages. That's another kind of way of talking about revenue loss generally. Some suppliers don't use that language, revenue loss, at all. They'll talk about OSD or OSDs. It's not language that we like. I don't think it's correct. I don't think it's politically correct because it's not exhaustive. And it might have been exhaustive at one point. It might have been that that's all that you could really lose money for was overages, shortages, and damages. But now there are, allowances, returns. There's a bunch of different things that are all kind of maybe could have fit within those three branches originally, but now they're kind of taking up some gray area between them, or just they've become their own thing as well. But here, for this one, this is when it's unloaded, right? It designates that the PO was received in full, or the shortage will be marked there, the overage will be marked there, the damage will be marked there, and all of that can be used as proof text for getting down to the bottom of the issue. What's really going on there? And here's an example of a POD for a gate or drop trailer stamp. And again, these will vary a little bit from retailer to retailer too, but generally it's a sticker that's placed on the BO by the retailer and signed by the driver. It proves that the shipment was arrived at a retailer DC or the equivalent of whatever that is in the drop ship case. Um, there can be some kind of exceptions to that, I guess we should say. Um, it does not prove that the quantity that is received, and so the burden of proof is on the retailer if the dispute is denied there too. So let's look at a few individual codes, and I'm running a little low on time, so I'm going to try to move through this a little bit faster. But here's a couple of things that we just wanted to pick out that we hear from suppliers and these retailers um, as the pain point that is unique to this particular retailer. And this information I think of as super valuable, especially for people who are more decision makers at these CPG companies, just to have a little bit of a sense of here's how our business model, here's why our business model won't be exactly the same across each of these teams because there's different issues. So disputing AP deductions requires several apps at Walmart. And that's one way of saying it. There can be tedious back and forth and confusing rejections. I would say right now, particularly a pain point, especially over the last like 6 months, is that AP deductions really weren't getting paid back on time. So that could be a huge issue for a CPG, especially someone who's struggling to stay in Walmart. If Walmart is a huge kind of portion of the business and it shows that you're just not as profitable as you were in the past, well, it could be like ghost numbers in a sense, where basically you do have a lot of AP deductions that you will win back. It's just Walmart is backed up. APDP is backed up because they canceled settlement disputing, and now they have teams that are really strapped to try to do all of this dispute validation. So we've seen that that's improved a little bit in recent times, but again, so these pain points are not eternal, and there are some things that are a little bit more relevant now as opposed to at other times. But yeah, basically what this one is saying is that retail link is a pain point. And anyone who's ever been in retail link knows that it is a pain point. All retailer supplier portals are not great. They were all designed in the year 2004 and haven't been updated since for the most part, unless there's a new app. Yeah, so they're all a little bit sticky, but some of them function a little bit better than others. And I would say that Partners Online at Target is okay. And Target is actually okay at communicating with their suppliers when, for example, there's bad weather at a DC. So it looks like a bunch of things have been shipped short or shipped late or something like that. Target does a pretty good job of communicating that to suppliers, at least so that they can win those disputes back with their buyers and with other people. But shipping document integration requires suppliers to download in a separate app with manual disputing, creating more room for errors with tricky search queries. Another way of talking about this is we see a lot of, unpaid invoices. Sorry, unpaid invoices at Target are a big issue, and it has to do with matching, with invoice matching, basically. So a lot of times suppliers will be making shipments to Target and just not getting paid for them because of the invoice matching, how complicated invoice matching is with shipments there. So that's what I would kind of call out as a pain point there. At Amazon, understanding what has been paid versus what is still needing disputed for an invoice. And you basically have one shot to dispute before having to escalate with a ticket. Another thing that I would say is you've got that 30-day window from the invoice due date to get those disputes in. And Amazon is just kind of different from other retailers. It's a little bit of a unique kind of animal. Vendor Central, I think, is another one that it's worth a shout out. We spend a lot of time talking bad on retailers. I will say Vendor Central, it's not perfect, but it is a lot better than some other retailers' softwares, and they have quite a bit of pretty helpful help documents. Not all help documents are created equal, and not all retailers make them as meticulously as the others do. And I haven't spent a ton of time in Vendor Central, so this could be take it with a grain of salt again. But I will say I've been able to find a lot of pretty helpful help docs in Vendor Central, which is another shout out too. While we're doing pain points, we could do some positive things too. You have a shorter dispute window at Kroger. Limited detail in Kroger's system means the supplier must manually gather data and documents quickly. And also Kroger, I mean, unofficially, Kroger is not the best at paying back disputes, valid disputes. So Kroger's got a lot when it comes to the revenue loss space that is not ideal, I think you could say. So, but here's a little bit more information about these portals that I was referencing on the last page. Vendor Central is a little bit of a one-stop shop, as is Levante. So you could think of that as a plus, maybe, for those as well. Synergy and Partners Online are basically the big two that you can think about. When it comes to revenue loss, they're the big two at Target. So Synergy, you can do both AP and AR disputes there. You can dispute in that app, but the invoice information is you have to find that through Partners Online. And Synergy is basically just an app within Partners Online. So I'm talking about it like they're separate things, but they're really not. And APDP is the app within Retail Link that does the AP deductions. But the AR disputes at Walmart are done through High Radius, which is just linked out in Retail Link as well. But again, with Walmart, you've got Retail Link and you've got about 1 billion apps. They're changing all the time. This one's going away. We've got a new app. We've got a new kind of place to do post audit disputing or whatever. Yeah, Walmart is a country. It's better to think of it in those terms than as a massive company. Can the buyer be a resource? We've seen not so much at Kroger and Amazon. And with this, there's always a caveat of it depends entirely on the relationship that you have with your buyer. Sometimes that relationship is really great and the buyer can recognize your value to them and will be bending over backwards to respond to your emails. That does happen sometimes, but it's not super common. I'd say especially at Walmart. Buyers at Walmart are motivated to be efficient and to not be completely checking their emails all the time. I guess is the way that I would say that. The politically correct response to that. And then can you dispute more than once on a single claim? Yes, for everyone except Amazon. And again, Amazon is just kind of different. So that's a good shout out kind of to there, that Amazon is not saying that you can't win it back. You only have one shot and then you can't win it back. Basically, after your first dispute, it goes into settlement. It's a very complicated process there too. We have a shout out in the chat that I wanted to mention now while we're talking about APDP and while we're talking about settlement disputing, from Krista, who said, I've also noticed in APDP the mass dispute function is gone. The button still exists, but leads to nothing when clicked. I've heard the same thing. Mass dispute creation was a little bit of a misnomer from the beginning too, because you couldn't attach dispute documents to them. So it may be just the case that AP disputing shortages at Walmart is becoming trickier. But let us know if your mass dispute creation is available still, if that functionality is available still in your APDP in the chat. But I've heard the same thing. Yeah, mass dispute is not really happening anymore either. So again, is that the result of they got rid of settlement disputing and they're overwhelmed, so they just need not as many disputes coming through at once? Could be, who knows? It's all kind of speculative, but thanks for that, Krista. Okay, code 22s at Walmart. These are the big ones. It does not match the quantity. Okay, so here we're going to see a lot of very interesting language that's being used by these retailers to to delimit or to not delimit, right? And Walmart, again, it's a country, it's big, so it's important to understand that, and this is a good thing. It's a good thing that they have 100 different codes, because they are trying to make it as discrete as possible. But there is overlap and there is gray area between some of these, especially the ones that are shortages, right? Okay, so what happened in this scenario? The BOL could be stamped as received in full at the facility, but the invoice was transmitted for quantities greater than what the facility claimed to receive. It's kind of more of an example. So disputing would involve proving the invoice quantity matches the received quantity, right? It's all about that number lining up. Okay, so a code 24 is when receiving the shipment, the facility signs the BOL as short against the quantities the shipment was said to contain. So carton shortage is the sort of more specific definition for this one. Code 24s occur when the shipper invoices for more than what the facility claims to have received and or what the shipment was said to contain. So it's a different way of kind of thinking about something that is really sort of the same thing, but that's why you would get a deduction on that. So Walmart claims to have not received any merchandise, and these are code 25. So this is when Walmart is saying we completely didn't get it at all. And so a code 25 deduction will always be for the full amount of the invoice, and it'll come on a different payment. So that's pretty tricky. It's hard to catch. And it's the most devastating too, right? Because you're not getting anything back. So disputing means that you have to prove that the items were received for the invoice in question. Sometimes maybe a code 25 could turn into a code 22 or 24 later on if Walmart is saying we didn't receive it at all, but they did. They just received less than what they expected. Then they would give you a code 24. So there's a lot of like different iterations of this too, as redisputing happens also. So for avoiding code 25s, this is a big shout out here, and it's the opposite of what I was saying about packaging and labeling. Packaging and labeling usually means that there's a different issue that's going on. In code 25s, again, more often than not, it's not that you saw the PO and you just didn't ship anything on it. It's that there's been a timing issue, right? So it's about the MABD. They're receiving a bunch of something and they're like, what is this? This is an overage. We're going to hit you with that or something like that. And then not aligning it with the actual order. So a good way of thinking about what causes code 25s is that a lot of the times it's timing, right? So the invoice is sent to Walmart before the order is shipped or arrives at the Walmart facility. So best practice is to schedule the invoice to be sent on the MABD. That's kind of what we say, but everyone's got their own sort of policies, whatever works best for you. Do not re-invoice once goods are delivered. This can cause a different fine, code 30s, but instead you can dispute the existing code 25 deduction. And again, you can do that and you can hope that it doesn't turn into one of the other ones. So that's the kind of complicated Walmart side of things. It tends to be a little bit more simple at the other ones, right? So a code A030 at Target is a manual deduction issued against an invoice for the difference between the invoice and receipt. And the majority of these are carton shortages. So, no, but here again, and this is why I say it's kind of a nice thing that there's so many different codes at Walmart, because what those codes are doing is they're specifically telling you what went wrong. This A030 is called no merchandise received for invoice. That is not technically correct. That's not really describing what's always happening there. That will be the equivalent of a code 25 at Walmart, but sometimes it is just a shortage, right? And the way that they're defining this is a manual deduction against an invoice for the difference between the invoice and the receipt, right? And the majority of these are shortages, right? So they could all be shortages, but there isn't a lot of super specific language being used there. So Target also has a 176. This is a lot less common. It has the same exact definition, basically, which is no merchandise received for invoice, which is also technically kind of incorrect. But these are referred to as auto chargebacks. It's a system-generated deduction issued against an invoice for the difference between the invoice and the receipt. So it's just not manual. Most of them are A030s. These are system-based. Maybe we'll see a shift in years to come where everything becomes more automated. We'll see. It could be due to a shortage, a cost difference, substitution, case pack issue, or a combination of these. So again, with the language not fully helping you get down to the root cause every single time. I mentioned invoice matching or unpaid invoices at Target. This graphic, it might be helpful to you, right? So this is an adaptation of one that we saw in Target that was actually wrong. So we had to make some changes to it. But this is basically how the invoice matching system happens. And the only reason I'm including it here, it may be helpful to you, but the only reason I'm including it here is as a demonstration of how complicated this process is for Target's receiving. So this is the reason why invoice matching creates so much revenue loss for suppliers at Target. It's just huge. It's this massive flow chart. So right down here, invoice remains unpaid. In the bottom right corner there, that's what happens to a lot of invoices, or a lot of orders. So they end up there and they end up not getting paid. So being aware of what hasn't been paid yet, for a Target supplier, excuse me, is really important too. Staying on top of that. So shortages at Amazon, shortage chargebacks. These are also called purchase quantity variance, which I kind of like as a description. It's a little bit more precise. But as I've mentioned already, this process is totally different from the others. Remaining shortages and potential shortages are really important for Amazon too. They're moving at a really kind of quick clip, so they want you to be aware of what's coming around the corner with these potential shortages. But yeah, you can read about this in a little bit more detail later on, or you can check out some of our Amazon content, which will dive into it a little bit more. But basically, unresolved potential shortages become remaining shortages, or legitimate shortages is another way of thinking about it. And then that will have to start going through the smart match process, and then eventually the dispute process, and eventually the settlement process. So it's a big old thing. But we've got some best practices here, as always, for Amazon in particular. Couple of call outs. Again, ASN accuracy and timing is important. I would really like to highlight that one. Not duplicating or sending the invoice too early. Again, timing is really all that we're talking about with supply chain, anything. Accurate PO management, vendor lead time. Again, it's all about timing. And all of the rest, again, delivery compliance, this stuff it's very important, but it's fundamental. And once it's figured out, it will be fine for the most part until there's another change, either on Amazon's side or your side. And then processing inbound receival manually is ideal too. We'll talk a little bit about Kroger, but as I mentioned already, Kroger has stopped really. I would describe it as it's becoming very difficult to win back valid deductions with Kroger in a way that makes some of this a little bit moot, or it could make this moot. It's still good to know the process, but if what you're seeing is none of your deductions are being paid back, you're not necessarily alone. So that's all that I'll say to that. Kroger has basically slowed down that process in a massive way. Not necessarily in the same way at Walmart. At Walmart, it's more of a kind of a technical issue, and Walmart still appears to be interested in paying back all of these deductions. Just it's taking a long time for them to do validity checks. With Kroger, we're not totally sure. So, and again, it could be my lack of insight into this. It could be our lack of insight as a group. So take it all with a grain of salt. That's the motto for today. But their code force at Kroger, it's a deduction from supplier invoice for a unit shortage. Kroger's receiving less than they were expecting, and I don't hate that definition either because it is pretty precise and simple. It's broad in some ways, but it is discrete. So code 6s are the equivalent of the code 25s. So this is a unit shortage technically from a supplier invoice, but they're saying they didn't receive it. And it can be offset by code 7s, fully, partially, or not at all, based on the billing and receiving of different UPCs. So it is still good to have oversight into this whole process, even if you're not winning back all of these deductions. These codes do relate to each other in a way that is complementary sometimes. And then code 8s at Kroger. These can be for either a shortage or a pricing issue. So there's a little bit of gray area there. For those, they're commonly due to a unit-based difference like packs versus sleeves. And you can reference the deduction details and the unit cost on the PO versus the invoice to determine root cause that way. Danielle, do we have a question on Kroger?
We do not have a question on Kroger, but we are coming up to the live Q&A, and we have a good question in the chat from Veronica. So Veronica asked, for Target carton shortages, do you have any recommendations if they deny disputes for any carton shortage less than a full pallet?
Interesting. I don't. I've never heard of that as a recurring issue that that other people have seen, but I may pass that question on to our product manager because maybe it's a newer development. But yeah, no particular recommendations if that's a kind of recurring issue that you're seeing is they're denying all disputes for any carton shortage than a shortage less than a full pallet. That is fascinating. But yeah, sorry, no, I can't be more help there, but I will definitely pass that on and get back to you, Veronica.
Well, thank you for going through all of that content, and thank you everybody for joining us today. It looks like we didn't have any further questions come in, but in the meantime, I just wanted to call out some of our resources. If you're looking for more hands-on material, we have multiple free educational ebooks with topics ranging from OTIF to SQEP to Walmart shipping and routing transportation guide. I know that a hot topic that has been going around is Luminate, and we know that there has been some confusion and a lot of questions that have come with this platform. So we have put together an ebook that is a guide to Walmart's Luminate. It can be found on our website, but I will go ahead and also just submit it in the chat. Maybe you can just find something that will be useful for you there. And in the meantime, we know that we are limited on time. So if this is where you have to drop off, we completely understand. You can reach out to us on our contact emails. They will be up here on the slide deck, or you can find us at SupplyPike. But in the meantime, we're going to go ahead and get started into our product preview. So Peter, I will hand that right back to you.
Oh, so sorry. I exited full screen. Yeah, great. So I'm going to get into our product here a little bit, which is a very kind of relevant. It's very relevant to the subject at hand whenever we're talking about AP deductions in particular. This will be really helpful for giving a little bit of oversight. The dashboard particularly is helpful for giving oversight into this performance. And depending on at what phase in your SupplyPike journey you are looking at this, you may have a lot that's been won back with SupplyPike. You may have a lot that's not disputed. deductions that have been received. And then there may be a much bigger section of the total actionable, which basically, and you can read the official kind of definition there. But basically what this means is here's the money that can be won back right now, based off of what we know from your shipping document integration. And we can see, okay, what's the Walmart research phase? And then what is the total paid back? So this could be the difference between total paid back versus approved with SupplyPike would be how much disputing you've done on your own over this same time period as well. But yeah, this is much more kind of at a high level. What I like to do is to go straight into the deductions themselves to look at a little bit more of the kind of nitty-gritty side of what the app can do with the shipping document integration. But again, you can look at, okay, you can filter by amount, you can filter by count. It's automatically set to amount as it should be because that's what really matters. And then you can look at a high level sort of thing for, and this is, again, really important for being able to report maybe to a higher up in your company or something like that. But for the actual users themselves, I like to go to the deductions page, and it looks really busy and really intimidating at first. But the first thing I want to call out and should be most noticeable to everyone right away is you've got some codes that we've been talking about already, shortages, and we can sort by those as well. So if you want to just be looking at the 22s, we can do that, or we could select multiple ones as well. So let's look at the shortages that we were talking about today, as well as we'll include some 25s in there too. So you can sort that way, and all of that is really can be really helpful and saving a lot of time as well. You can sort by, this is a newer feature, root cause. We've basically done some programming around trying to figure out common root causes and how they can be avoided. You could sort by readiness or status or any number of other things as well. And we have a great product team. We have a great team of customer success people who are all constantly listening to what current customers are looking for so that they can adapt what the app is currently to their particular needs and situations. So all of that can kind of be edited and customized as well too. But here, this is the thing that I really like to call out because it's what helps us do our validity checks. Right here, you can see this is likely an invalid deduction. And how on earth could SupplyPike know what that is just with a simple, the Retail Link credentials? Well, in Retail Link, we can pull the purchase order, the invoice. We can look at the claim itself, and we can integrate with the shipping documentation, depending on what shippers you have and all of that. But we have a ton of integrations with shippers already. And that's how we basically do the validity checks. So, excuse me. So our software can scan all of that for you, and it can happen like in the blink of an eye. We can do it that fast. So if for whatever reason you would not want to not dispute, you can always do that. And that will file it away elsewhere. You can submit that way. Or what you can do, and this is my favorite part, is you can set up auto disputing, and you can use any sort of criteria that you would like to do. For 22s and 24s, just because of how common invalid deductions are for those code numbers, what a lot of people will do is they will turn on auto disputing, and you can dispute everything, so all criteria, or just the likely invalid, or whatever you would like. And then you go down to the bottom and you can click Save Changes. If you would like to auto dispute everything that is below a certain dollar amount, you could do that too. If you want to look individually yourself at all of the other deductions that are really big ones, that could be valuable, I would imagine too, for maybe training purposes or something like that. But these are the code numbers that auto dispute is available for. And again, that is something that is evolving constantly and changing over time as well. Once we get better integration into things like the supplier agreement, maybe we would have a better sense of which allowance deductions we could automate as well. So all of that is changing all of the time. And probably my favorite feature of this, it's the thing that a lot of people kind of freak out at whenever they first get a little peek at the product. But that's that. We've got other retailers over here that you can see. We're really excited about launching Home Depot now, and we'll be expanding into some other pretty big ones here too in a little bit as well. But that's that. I think that that's it as far as the webinar goes. If you have any questions about our product or about just regular kind of shortages, shortage deductions generally across the retailers, please reach out. And yeah, that's all from me. Have a great day, everybody.